Hello everyone, this is Dr. Mihir Shah once again with another video. In this video, we are going to solve November 2018 university question paper under the subject direct tax. Again, a very important video for all the TYBMS SEM5 students. Okay, chalo, let us see which all questions were appearing in this particular question paper and how to solve those sums. Okay, chalo, one by one. The first question was Mr. Peter Florrick is a US citizen. He came to India on 15 September 2017 for a visit and was in India till 31st March. In the earlier previous year, he was in the data which has been given to us. Okay. Now, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 years ka previous data has been given to us. Now, 15 September se he's been there in India. Okay. So September has 30 days from which he was there in India on from 15. So 16 days of September, 31 days of October, 30 days of November, 31 December, Jan 31, Feb will be 2018, which is not a leap year, so plus 28, and March will be 31. So he's going to be there in India in the previous year. For in the previous year, the value comes to 198. So he will be a resident of India. Okay, from 15th September to 31st March, if you remove, it comes to around 198. So he is a resident of India. After that, we need to find whether he's an ordinary resident or not. So we will add up 7 year ka data. Okay, so 205 plus 110 plus 190 plus 185 plus 220 plus 50. So 1, 2, 3, 4, 5, 6, and one more 190. So up to this area we need to add up. It comes to 1000 and 1150. Okay, 1150, which is more than 730 days. So final conclusion will be he is a resident and an ordinary resident. Okay, now this I have solved in a very short manner. Okay, you all can go through the previous videos where we have solved that question paper, and that I've given you all the steps. So here just the answer ki he is a resident and an ordinary resident. Okay, so that was the first sum which was there. Next, Mr. Kaustubh Munj gives you the following information: house 1, house 2, and other source, and deductions are given to us. First is SOP, the other one was LOP written, but it is vacant. So this becomes VLOP. Fair rent 20,000 a month. So into 12 came to 2 lakh 40. House property ka everything will be nil. Okay. Municipal valuation was 24,000 a month. So 24 into 12 is 288. Higher is 288. Standard is not given, so lower is again 288. Actual rent received was 30,000. 2 months vacant, so into 10 comes to 3 lakhs. Under VLOP, the rule is whatever is actual will become your GAV. Less municipal tax 25,000. So 2,75,000 is the NAV. 30% of that will become your standard deduction. Now interest on borrowed capital 1 lakh and 70, we taken that, we minus it. Under SOP, net income is negative 1 lakh, and under VLOP it is 1 lakh 22,500. So the net income from house property will be 1 lakh 22,500 minus 1 lakh, which comes to 22,500. Now that was income from house property. Now we need to add that to the other source. So income from house property was 22,500. Other source mein they are giving you interest on bank deposit and winning. So that comes to 1 lakh. Add up 1 lakh 22,500 is a gross taxable income. Now deduction mein ATC mein we have PPF, NSC and LIC premium. We added up all that. The value comes to 1 lakh. So 1 lakh 22,500 minus 1 lakh, the net income or net taxable income will come to 22,500. This was the second sum which was there in this particular question paper. Simple. I hope everyone have got that. That was house property, other source and deduction. Okay, next question. It was based on business and profession, other source and deduction. Okay, Rohit is a disabled person and net profit is given 7 lakh 90. So we start income from business and profession 7 lakh 90. Salary is a business expense, cannot come. conveyance cannot come. Business printing is a normal business, cannot come. Staff welfare normal. Depreciation will come. Why? Because there are two depreciation. So 75, 60,000 on top, 65 down. So I'll write it here. 60,000 on top, 65 bottom. Motor car may adjustment 1/5 is for personal, so we'll take 1/5 of motor car, 10,000. Advertisement again adjustment 10,000 is for public politics, so we put that. Audit fees in normal business cannot come. Embezzlement normal. Drawing and income tax, yes, both will come. We add up, we get 2,20,000 as a disallowed expenditure. Now income disallowed may we have dividend and interest both. We add up, we get 1,25,000. So 7,90 plus 2,20 minus 1,25, 8,85,000 is a income from business and profession. Other source may again these two are there 20 and 40, which comes to 60,000. We add up, we get our gross taxable income as 9,45,000. Under deduction under chapter 6A may we have pension fund of 50,000 and he is disabled, so 80D 80U may 75,000. So total 1,25,000 deductions. So 9,45 minus 1,25, 8,20,000 is your net taxable income. Okay, so this was the third sum which was there in this question paper. I hope everyone have understood that. Chalo, next. Mr. Netra purchased a house property for 1 lakh in the year 1994. Cannot take that. Fair market value was 15 lakhs. Sold the property for 1 crore 50 lakhs and brokerage was 3 lakhs. So we start with sale 1.5 minus 3 lakh gives you 1 crore 47 lakhs. Less index cost of acquisition is cost of acquisition. This no, the fair market value 15 lakhs into 272 divided by 100. We get 40 lakh 80,000. Less index cost of improvement. Three improvements are there. One is of 5 lakh, 8 lakh, and 12 lakh into 272. All of them divided by the CI of the improvement. So the first will be 122, then 200 and 220. So 122, 200, 220. Multiply, divide, we get those three individual values. From sale consideration, when we minus all these, we get 69 lakhs, 33,610. Less new purchase of investment, which is done of 50 lakhs. We get a final long-term capital gain as 19 lakh 33,610. Okay, so this was the question based on long-term capital gain. Okay, last question which was there in this paper was find the scope of total income. So first thing was rent from property in Mumbai received in London. Since it is in Mumbai, everyone will pay for it. Income from agriculture in Sri Lanka is a foreign income, so only the first one. Dividend from Japanese company received in India. If it is received in India, everyone pays for it. Income received in USA for service rendered in India. In India, everyone pays for it. Business from income of business in Mumbai. Mumbai, everyone pays since it's India. Royalty income received from Indian company. Again, everyone pays for it. Business from Bangladesh received in Bangladesh but set up in India. Since it's set up, the first two people will pay for it. Income accrued in New York and received in London. Foreign income, only the first. Untaxed profit of past won't be taxable. Add up, we get a final taxable income 11 lakh 50,000, 8 lakhs, and 6 lakh 75,000. Okay, so these were the various questions which were there in the paper of 2018. So I hope everyone have understood all the various sums which are there in this paper. With that, we will be ending this video here. Thank you.